I hear regularly from many of you directly, individually, or through my office and through the folks on my team who are working so hard to make sure that we are doing the best we can to implement what we've gotten into law so far. One of the pieces that I am happiest about or proudest of is the 6-month SBA loan deferment. This is a provision that my office and I literally wrote. It got $17 billion in the CARES Act, and it means that about 900 companies in Delaware who are current SBA 7A and 504 loan holders have 6 months of deferral when it's not just being pushed off and added to it. We are literally paying the loan servicing costs. It took a while to get all of the SBA lenders and the SBA on board. And frankly, if there's anyone on this call who is an SBA, current SBA or future SBA loan holder who isn't familiar with these details, please let the chamber know. This is partly why applying for a new SBA loan is a positive thing, because this applies going forward on a rolling basis. But it should also have served as a way to give some clearance for those who are SBA staff and SBA lenders in our bank community here in Delaware, because it gave them 6 months of liberty from having to do a loan servicing. Today should be the first day that the State Department of Labor portal goes live for independent contractors, getting some relief in terms of being able to apply for and get unemployment insurance. I know many on this call have either individually or referred people to us who have been trying to get through this. The maddening delays at the Department of Labor federally and all around the country were predictable because the IT systems are so out of date, something I have advocated for in previous years, and we're now seeing the consequences of having a federal IRS and a federal DOL that are running on very outdated computer servers and systems. But hopefully that will begin to resolve this week. As I think you know, Bob and folks on the call, I've been taking advantage of the opportunity of being a member of the Small Business Committee to advocate for some of the very reasonable changes that you've been requesting. Just last week, I was on a call with the Secretary of the Treasury, Secretary Mnuchin. I frequently text and talk to the Deputy Secretary, Justin Muzinich, and I managed to run Muzinich and Mnuchin together. Who would have imagined we'd have a #1 and a #2 at Treasury with names so wonderfully yet oddly familiar and similar. So the SBA Administrator, Jovita Carranza, and the Secretary of the Treasury and his deputy were on this call, and I raised 3 issues. First was the eligibility of 501c6s. All of you know that 501c3s, sort of traditional nonprofits, are eligible for the PPP loan to grant program. SBA has not traditionally done loans or grants to just run-of-the-mill community nonprofits. This has been a challenge for them administratively. They've gotten out now a significant number of PPP loans and loans to grants to 501c3s. But 501c6s, which are typically trade organizations, chambers of commerce, are not by statute eligible. We had an interesting call where a variety of us were advocating for 501c4s, 5s, 6s, 7s. And in the end, as a group, this was a bipartisan call by our committee led by Senators Rubio and Cardin. By the end of it, they agreed they would get us a response. They've been dragging their feet on whether they can do it by regulation or whether we have to amend the statute. I will tell you, my gut is they will end up saying we have to amend the statute. And I'm going to end up advocating in the next round of relief for a statutory fix so that if and when there is another round of SBA assistance, 501c6s are eligible. One of the other things I've heard the most input about is the 8-week term for the PPP loan program. We did get a direct answer from the Secretary. Their legal team has looked at what they understood to be legislative intent and concluded that they cannot administratively make the change that I've been advocating for, which is to allow the 8-week expenditure window to only begin tolling once a governor issues a reopen order, which more rationally fits with when unemployment insurance will begin tapering off or running out, when businesses will be able to actually fully reopen. You know, frankly, it's somewhat maddening to literally have the legislators on the call who wrote the provisions saying, we're the legislators. We can tell you that was not our intent. 6 weeks ago, many of us thought we would be open, and the disconnect between the 4 months of unemployment insurance increase and the 2 months of having to pay it out, frankly, is a maddening disconnect. And I'm sure it's put many of you in difficult situations where you have to choose at this point whether to simply return the PPP or take it as a loan. One place I am hopeful, there is a bipartisan letter that 21 senators signed that we submitted again to Secretary Mnuchin and Administrator Carranza on May 5th that argues for the current 75-25 split. If you're going to have your PPP loan become a grant, the statute says you must spend at least, you can spend up to 25% of your loan amount on rent or utilities. We are asking the Secretary and the Administrator by administrative decision to change that balance to 50-50. So that a much broader range of small businesses who are having difficulty attracting their workforce back to work, bluntly, because in some cases unemployment insurance is temporarily more attractive than returning to work full time, or because they're not really able to fully reopen and folks don't want to be paid to come back to a workplace where there's nothing happening or nothing for them to do. If we can shift it from 75-25 payroll to rent utilities to 50-50, there's many more businesses that'll be able to meet that threshold and where it makes sense, and it'll transition nicely into a grant. Last, let me just quickly mention two things. One of the areas I've been most frustrated by is the EIDL, or the Emergency Impact Disaster Loans. SBA has significant experience with pushing out the door disaster response loans in large volumes quickly. But the volume we've been asking them to process here has dwarfed anything previously. Previously, they've been regional disasters like Hurricane Katrina, or wildfires in California, or tornadoes in a region of Missouri. This is a national economic and public health disaster. And they had, I think it was 3.7 million applicants for the EIDL program within the first week, which dwarfed any previous program they've tried to administer. It's taken them nearly a month to get this up and going. We gave them another round of funding, both backstop and leverage funding for EIDL in the last appropriation bill, the $484 billion bill that we just got signed off on 2 weeks ago. Yet they have been frustratingly slow to get that out the door. Last thing, if I might, about the PPP program. In the most recent, the second round of funding for PPP, there was a dedicated amount of, if memory serves, 60 billion that was to be lent by credit unions, community banks, and community development financial institutions. And that has led to a significant number of the very smallest nonprofits and businesses who were in touch with my office to finally getting access to their loans. The numbers that Andrew Dinsmore's given me from SBA for the May 9th numbers on PPP second round is that there were 4,800 approved loans in Delaware for about 366 million, and under the EIDL advance program, 7,700 for about 27 million. In both cases, I'm bluntly frustrated that we haven't gotten more and gotten faster. I've done a lot of outreach and connection with our banking community, a number of whom are quite experienced with small business loans. M&T was particularly responsive. Bank of America has been engaged and quite responsive, and some others have come around, and now a much broader range of banks in our community, like WSFS, like Artisans, others up and down the state. I shouldn't start picking particular names or I'll get Fulton mad at me, or Delmarva mad at me. We've worked pretty hard with the Delaware Bankers Association and with all of you to try and get this moving as quickly as we can. I'm also sensitive to the fact that nonprofits operate often with very little in the way of reserves because of some changes in the tax law a few years ago. You are seeing far fewer folks itemize and end of year deductions and contributions were not as much as had been hoped for at the end of last year. So Senator Langford and I have been leading an effort to try and increase the charitable deduction and to try and increase charitable contributions for this calendar year to Delaware's and America's charities. So let me close there, Bob, and just say I'm grateful for the chance to take your questions, criticisms, concerns, and input. I am thrilled with what a large participation there is in this call, and I wish I'd put on a virtual background deserving of the day, but you know, what you've got is my built-in bookshelves with a whole bunch of tchotchkes, including the occasional award from the Newcastle County Chamber of Commerce. Thanks for a chance to be on with you. I look forward to your questions.
Well, Senator, thank you very much, and the backdrop is perfect, and you've got the flag there too, so you're in good shape. Again, my gratitude for all that you're doing, and we do have a lot of folks, as we mentioned on the call. So at this point, I'm going to turn this over to our events director, Jamie Watts, because she controls all the buttons, all the mute buttons, and is watching the chat. If people have a question, you can put it in the chat box, and Jamie's going to try to call on some folks and see if we can engage in a nice little Q&A session here. So with that, Jamie Watts, it's yours.
All right, thank you, Bob, and thank you, Senator. We do have a question from two individuals, and it seems to be a similar question from Landmark Engineering and also from the Delaware Center for Horticulture. Wondering about whether or not the expenses need to be incurred and paid during the 8-week period, and looking for more clarification on that, and also about an 8-week period is accrual versus cash basis.
Good news is I've got an accountant in my office in Jim Paoli, which is why you could see me sort of leaning around going, Jim? Those are two excellent questions. You said cash basis, and in your view, you have to show that you both incurred and paid those expenses during the 8-week window? I'm getting a nod from Jim. So what I'm telling you, I'm being told, because honestly, I don't know the answer to either of those, is cash basis accounting for expenses accrued and paid during the 8-week period. By the way, both SBA and Treasury keep updating their guidance. As someone who has tried to read and understand and apply their guidance, I share with you a concern about there not always being crystal clear. Our website, the coons.senate.gov website, has the latest directions and guidance from SBA and Treasury. Jim's taking a note on those two questions. To the best of our knowledge, it's cash basis and incurred and expended. But if there is a revision to that 8-week period, we will let you know and we will post it as well.
Senator, if I may, because it just brings up again in my mind a question, because you mentioned the guidelines and the guidance and the changing guidance. One of the things that is a particular concern to me and numerous members who have received notices from their banks, that the changing guidance on whether or not you should have taken the loan in the first place. Right. And really implying, basically giving people about 2 days to pay back the loan, in basically letting them know that they'll be audited, and if they had the ability to pay those payrolls, then they may have to forfeit the forgiveness. And that was not made clear when people applied for this loan. So I feel like it's a little bit of you're changing the rules in the middle of the game, and it has very serious implications. And I understand there was a bit of a backlash from a lot of large companies that may have received loans that people thought maybe shouldn't have. But we're talking about companies that are just solid mid-market companies here in our community that are not large corporations or not large entities. So that's a big concern for us. So I just wanted to raise that issue with you.
Thank you, Bob.
Okay, we have another question. This is from Bruce Rushton at the Growth Coach. It's also something that was brought up a number of times during the recovery town halls. And it's what's being done to protect business owners from legal action that could come from customers and employees that may contract COVID as we reopen.
Right. So some of you may have seen my editorial with Bill Crystal on this point. I think there is a balance for us to strike. Some employers are saying, well, why would I reopen if I'm going to face liability? And so there is some serious conversation about what would that liability relief look like? Structured how? Blanket and across the board for your own workforce, for your workforce and customers. What are the relevant OSHA or DPH standards? So there is a conversation underway about how to provide some standard of care and some liability relief. But there is also concern on the part of employees. In a number of states, my impression is, employers are being told, if you get offered the chance to go back to work and you do not accept it, then you are ineligible for unemployment insurance. I think there has to be some route or mechanism for employees to say, I am staying home because I am either sick myself, I have an immediate family member for whom I must care who is sick, or I lack confidence that my employer is providing a reasonable level of safety in the workplace. Well, who's measuring that? Based on what test or standard? We have to be able to find some common sense agreement about what guidance has been given for what sort of distancing and PPE and sanitizing needs to be provided for there to be a safe workplace. And if you as an employer are following these guidelines, you are not amenable to suit. I mean, that's typically why we have OSHA safety standards or workplace standards, is if you can demonstrate you've met a reasonable level of care, things go into the, so for the workforce, obviously we have the workers' comp system. For the general public, we don't have, to the best of my knowledge, we don't have a clear legal standard yet for contracting the virus. How would you prove that you got it at one particular restaurant or store when it is so highly transmissive? How would you prove that that particular restaurant or store didn't follow guidelines or guidance? This is relatively new area for all of us. So I'm looking to the chamber for guidance on it. It is being actively debated in the Senate. We do not yet have a proposal over from the House about what the next round may look like. But Majority Leader McConnell has made it abundantly clear that he thinks employer liability relief is a critical part of the next package.
Thank you. Then we have had a number of questions regarding the EIDL loans. Do you have any recommendations for speeding up the process? There's one individual that says that she's been waiting for a month. And also figuring out your status, where you know where you are in the process.
I think John Fleming from SBA is on this call. And frankly, rather than have me guess at how you can check your status for EIDL, perhaps John can come online and tell us that. I know that many of you are frustrated. So far, my impression is that the SBA staff for Delaware have not been able to check on status, but we did provide a significant increase in funding for EIDL to begin to move the process. And this is something I specifically raised with Administrator Carranza. John, I'd like you to know I complimented the Delaware office staff, but also said that I thought a perfectly reasonable use of appropriated funds would be to hire more people to speed up the processing.
Thank you. Question from James Bedola. Any hope that the next round of stimulus funding for the states will be unrestricted and allowed to fill state budget holes?
Yes. So two things. Justin Muzinich, who is the Deputy Secretary, I should have said this earlier. James, thanks for the question. A critical decision that Treasury has just made last week is they will allow states to use the CARES Act funding to replenish depleted unemployment insurance pools. Because frankly, I've heard from many of you a grave concern that as soon as possible, the unemployment insurance rate will skyrocket because the Delaware's fund is nearly depleted or now is depleted. So the Department of Treasury has issued a ruling that they will allow the state to use some of the funds they received in the CARES Act to replenish the UI fund. First. Second, it is the top priority for my caucus in the Senate that the next round of funding prioritize state and local governments and give them flexibility to deal with revenue shortfalls. Most state and local governments do not have any flexibility. They have to pass balanced budgets. Most of them have seen dramatic revenue reductions, and as a result will be forced to lay off public employees or dramatically raise taxes, which in this environment I think would be a non-starter. So exactly the people who we are hoping will be processing SBA loans and unemployment insurance loans, working in public hospitals or as paramedics or first responders or teachers as we get back to school in the fall. These are exactly the people I don't think we should be laying off. So I do think there will be a priority on some flexibility with the already distributed funds, the $150 billion from the CARES Act from 6 weeks ago. And I think it'll be a real priority for the next package when that comes.
Thank you. And to everyone submitting questions, I'm trying my best to get them in the order in which they came. There were a number of questions regarding the PPP loans. One of which was, this is from Bobby Pancake, the PPP loan works if you dig in and understand the program. Loan forgiveness works if you hit your FTE, keep employees at 75% of their Q1 earnings, and spend 75% of the loans on employee type expenses. My concern is that the loan or loan forgiveness it is, what happens when I've used up the money and the 8 weeks and I am running a profitable business, but I'm forced to lay off, am I forced to lay off a portion of my employees again? Is there a plan for round 2 of funding for these that have, for those that have received loans and followed guidelines?
Thank you for the question, Bobby. This is exactly one of the things we have to wrestle with and address in our next package, because the 8 weeks is, which by the way, the 8 weeks begins running when you receive the funds, not when your loan is approved. But that 8 weeks is going to run out pretty fast. I don't think any of us believe that our economy is going to be fully back in 8 weeks. We're going to have a lot of folks nervous about going out in public, nervous and anxious about going to restaurants in particular. And so even though we may be reopened as a state, I doubt that we will see robust employment and robust economic activity in just 8 weeks. There is, of course, always the threat or challenge of reinfection or of the pandemic infection rate rising again. So that is a perfectly legitimate concern, Bobby, that you'll have reopened, brought people back, and just be forced to lay them off again. There is strong resistance in the Republican caucus to our extending unemployment insurance, the federal surplus of 600, the federal add-on, excuse me, of 600 a week past the 4 months. That does run out, period. After 4 months, it was funded under the CARES Act, which is 6 weeks ago now. So we're going to get to a point where 8 weeks of PPL runs, ends. You've got people who have a brief window where unemployment is above 400 a week. And then, unemployment will at some point run out. I think we need to figure out a follow-on round of loans to grants for those who were already approved for PPP, and with a preference for those who got it late or who are able to demonstrate that they can quickly rehire people. But there's as many ideas for how to do this in the next round as there are senators, and we do not yet have an agreed upon package or path forward.
Thank you. This message is from Carla Stone. Can you please address the new exclusion of additional medical products and other goods from Section 301? additional 7.5% tariff on list 4A goods from China. The exclusion is only good until September, and we know that the need for these products may extend well beyond September.
Carla, thank you for the question. I think I just signed on to a letter about extending that tariff exclusion, particularly because of this contact and this context, in that we badly need to import medical products, in particular personal protective equipment. Two things, if I can, I'll ask and we'll follow up with you on where that stands. I think that James Langford and I were working on an extension of the surcharge waiver. But I also frankly think that we're going to have a serious conversation in the Small Business Committee about providing incentives for onshoring of manufacturing. There's been a number of articles recently about how 90% of the manufacturing of personal protective equipment has been offshored, mostly to China, some to Mexico. And frankly, it put us in a very vulnerable place as a country. And it's something we should be looking at restoring to the United States, although that will take quite some time.
Thank you. This is a question from Eric McCollum. Looking for clarification, was it said that federal funds will be given to states with no restrictions? How can we ensure that we are not covering states that have been irresponsible in the past?
Eric, I'd love it if you could define for me irresponsible, because bluntly, different states have different structures, have different approaches. I don't mean to be snarky. What I have heard from my Republican colleagues in the Senate, as we have privately discussed this, is they're concerned about states like Illinois that have public employee pension fund shortfalls that are dramatic. If that's what you mean by irresponsible, I think there is a big gap between saying we will only fund immediate pandemic response and we will fund literally anything with no strings attached. And I think there is a way to craft a next round assistance to states. The money that states got from CARES 6 weeks ago explicitly says only for net new expenditures caused by the pandemic, and you cannot use this for revenue shortfalls. For most states, the revenue shortfalls are massive, and in the absence of federal assistance, they're either going to have to lay off public employees or they're going to have to significantly raise taxes. I think there is a way to separate that from filling pension fund holes, but that's something we're going to have to argue through in the next round. The restrictions on how Delaware is able to use its funding right now pretty tightly constrain what the state is able to do with the $1.25 billion that in total the state of Delaware and Newcastle County received. And I do think there should be more flexibility to allow states and state legislatures to decide how to respond to the pandemic.
Okay. And to clarify, he did say that irresponsible would be for things other than coronavirus losses or expenses.
Well, so let me, a state that is irresponsible no longer has the money to sustain all of its current public school teachers. If that's what you mean and you don't think we should provide any federal support, I will tell you that in the state of Delaware, you will see significant layoffs of public employees where they are not being laid off because of the pandemic, but they're being laid off because the state's revenue has dropped dramatically because of the pandemic. I hope that doesn't just seem like word games, but what the state can clearly do now is buy more masks, buy more tests, pay for overtime for paramedics. That's direct response. But they cannot use the money they receive federally to pay teachers' salaries when the federal government chose to push back by 2 months, and now longer potentially, when income taxes are due federally. That triggers a 2-month delay for the state. That has triggered a dramatic reduction in their revenue. A. B. City of Wilmington relies on a wage tax. The wage tax has dropped off dramatically given the number of people who are newly unemployed. Does that mean that the city of Wilmington has been irresponsible, or that the governor, in the responsible exercise of his responsibility for public health, closed businesses all over the city, and as a result, their wage tax goes down? I think one person's irresponsible is another person's responsible in responding to a pandemic that really has required a dramatic economic and public health response.
Thank you. This question is from Lisa Morkides from Brouhaha, and specifically about rent, but specifically in the hospitality industry. What happens in July when our PPP funds run out, in the likely event that we in the hospitality industry are still running at only 25 to 50% of previous sales because customers are nervous about sitting down in a cafe or a restaurant? We will have rent payments with little money to pay landlords in default of lease. Is there any effort to provide tax credits to landlords or rent relief for tenants?
Yes, thank you for the question, Elisa. And thank you for running a great local business that I've enjoyed for many years. There are both specific and very large proposals for relief for landlords and tenants, both for mortgage payments and for rent. The House is currently considering this, but I know that in the Banking Committee, which is Banking Housing, in the Senate, there are some very significant proposals for that relief going forward. I also previously mentioned a bipartisan letter I've signed to the Secretary that has 21 bipartisan co-sponsors that urges shifting that PPP formula from 75-25 to 50-50, so that there is more payment being made on things like rent rather than wholly on payroll. This is going to be a real challenge for us. Some of our commercial real estate property owners, and many of you who have rent obligations you have to meet, have reached out to me in my office and said that this is going to be the next big challenge for us economically. Folks will be able to open modestly and have modest revenue, but they're going to have to meet rent payments. And as we begin to have defaults on rents and then have defaults on mortgages, that may lead to a record number of commercial bankruptcies. My preference is for us to forestall that by, again, making some significant federal expenditures, whether that's through tax credits or direct outlays. This is going to be a very expensive way to try and reduce or lighten the impact of what is already a deep recession. Thank you, Elisa, for the question. And Bob, I look for the specific and concrete proposals from the chamber about how we could best structure this in a way that is fair in the commercial real estate sector.
Thank you, Senator.
And we do have John Fleming also on the call. I'm going to unmute him. John, I think I have the right person. John, I think you should be unmuted now. Or this one, because I think you had two accounts open. John, can you?
There you go.
Perfect.
Hey, thank you, Senator Coons. Thank you for your kind words. And you know this law better than anybody. You're the one that wrote it, so I appreciate the doing all the background on it. The question you had earlier about EIDL, that's been a challenge since the beginning, trying to figure out where people's applications are. We're starting to get some inroads. We have a couple of other email addresses that we're using to contact the center, but it continues to be quite a challenge to figure out where your applications are. The idea, I'll be honest with you, the idea of first come, first serve is kind of, they're trying to get it in order, but some of them are coming out in different orders. It's not necessarily going to be first come, first serve, but we're trying to get them in the right order. To give you an idea, we have over 6 million applications currently in the pipeline, and we're hiring people every day. We're up to 3,500 people that they've hired or in the process of hiring for the disaster center. So we're doing the best we can to get that straightened out, but it does continue to be quite an issue. We ask for your patience, and we'll get it out to you as soon as possible. Thank you for the time.
Thank you, John.
Thank you, John. I have a question from First State Floats. We have been closed since March 15th and we're lucky to receive the PPP. As a result, staff has been unsuccessful in getting unemployment. We are paying employees out of PPP in lieu of unemployment while remaining closed for business because it is morally and ethically the right thing to do. If the shutdown is extended, what will the state do to support small business and ensure employees can reapply for PUA unemployment benefits and receive further forgiveness from the bank ambiguous repayment terms?
I'm not sure I exactly understand the question, but if your question is what will the state of Delaware do to extend support for small business, you know, frankly, part of that depends on whether the federal government provides more assistance and support to states and then encourages states to make that available to small businesses in programs that states craft to meet our specific circumstances. We have a robust tourism and hospitality sector in Delaware, and I know that Governor Carney, with whom I'm talking regularly, is well aware of the ways in which hospitality has borne some of the sharpest burdens of this pandemic and the shutdown orders. So it would be my hope and expectation that the state would provide more assistance and support, particularly for those, and First State Floats as an example, who've done the right thing, who've applied, who've kept people on payroll, who've perhaps are soon going to get to the end of their 8 weeks of assistance and are wondering what's next. As I said earlier, I do think that the Small Business Committee in the Senate and the House is going to work on sort of what is the next round. Is there an extended play version of PPP? But my crystal ball is pretty cloudy right now. We've got, frankly, sort of a standoff between Majority Leader McConnell and Speaker Pelosi about should we do more assistance to states and localities? Should we do more for businesses? Should we simply wait for another month and see how it's going and how reopening is happening? I will tell you my view, we shouldn't wait. We should put together the guts of what will be the next round of assistance, because it takes a month. Once we enact a bill, it takes weeks for the SBA and Treasury to refine the rules and to distribute the money. I think we should be getting going right now on legislating. I was deeply frustrated that the whole Senate was back in session last week, and most of what we did was confirm a conservative judicial nominee from Kentucky. We didn't have any hearings about PPP, and we, other than a constructive and important call with the secretary and the administrator, we are not currently drafting in the Small Business Committee. And I'm getting on a train going back to Washington this afternoon, and we don't have anything scheduled in terms of making progress on this issue in the Small Business Committee this week either. So I'm trying not to be too sharp about it, but I think we are being put at risk and made to travel back and forth to Washington. And some of you may think that confirming more conservative judges is the single most important thing we could be doing in the middle of a pandemic. I frankly don't think it is. I think it is one thing that is the Senate's job, but it is far from the most urgent thing that we could be doing.
Thank you, Senator. And I know that we are running close to the end of our time. So we do have one more question. If for some reason we missed one of your questions, we are collecting them and we'll be able to review them after the fact. What is happening with insurance? Clause that excludes loss of revenue due to pandemic. Is Delaware seeking exceptions for these types of clauses for businesses?
I believe there is a conversation. So we're talking about business interruption insurance. And my understanding, my ill-informed and superficial understanding about business interruption insurance is that after the, I think it was the H1N1 pandemic that looked like it might become a genuine nationwide pandemic, but then didn't, that a lot of commercial insurance and a lot of state insurance offices rewrote business interruptions so that it no longer covered pandemics. And this is being actively debated between state insurance offices and the insurance companies. I know there is an effort to try and craft a a big and very expensive bill that would essentially replace business interruption insurance with federal disbursements directly to businesses that have been interrupted. I have a proposal I'm looking at on that front today, and I know that there's proposals in the House as well. One of the questions we've got to ask is how many more in terms of trillions of dollars in federal expenditures are you all willing to support? And given that we have a record national debt, and we've just signed off on about $4 trillion in new expenditure, one of the proposals that would essentially replace business interruption insurance with direct payments from the Treasury to pretty much every business that's got business interruption insurance that's not paying out right now could cost another $5 or $7 trillion. So at some point, the price tag here is very hefty. And I am on the phone every day with Republican colleagues, with Democratic colleagues too, but I've been on the phone literally every day in the last 30 days with some partner I am trying to move some of these bills forward with. That's not always easy in what has become a pretty divided Senate. But I had some encouraging calls just this past weekend with senators who've got actual experience in the business sector and are trying to find a path forward on this, whether it was Rob Portman or James Lankford, whether Tim Scott or Mitt Romney. So please know that I have a sense that you would rather we get past the partisanship and come up with solutions. That's not always easy in this environment, but I have a strong sense that that's what you would prefer me to be doing. So I am trying.
Great. Well, Senator, thank you so much once again for taking the time to join us today. We're clearly in uncharted territory, and in times like this, it's particularly gratifying to have someone like yourself in DC representing us. Your willingness to listen to us and to advocate on behalf of the issues that we bring to your attention is really appreciated. I know you can't make all the people happy all the time, but I can assure everyone on this call that your office is always open to hear our concerns, and that you've been a very proactive advocate on many of the issues that we've brought to your attention. So again, thank you so much. To the 280 people who are on this call, I just want to, most of which are chamber members, I want to thank you for spending some time with us today. I want to thank you for your support of the chamber. For those of you who are not yet chamber members, I know you will be soon. So reach out to us and see if we can take care of that for you. So again, Senator, thank you so much for your time. I should have started with this, but I hope that everyone in your family as well, and that everyone on your staff as well, and we wish them all the best and as we move through this as well. So thank you once again, sir.
Thanks, Bob. I hope everybody had a chance to enjoy Mother's Day yesterday and to thank our mothers and those of us who are married and have children, our wives who in so many cases are the anchor of our families, our businesses, our communities, without whom none of this would be possible. The only sort of silver lining to all this that my wife and I privately, quietly agreed on Sunday was that we had all three of our kids home. So I hope you all are staying safe and healthy, and let us know how else we can help, and know how much I appreciate what you do as a chamber and as employers for our community and for our county. Thank you.
Thanks again, Senator, and thank you again, everyone. Have a great afternoon.